Hello, today is the 28th of October 2010 and a silver technical analysis video on the silverlog.blogspot.com. And currently we've been in this range from around 23 to 24 mainly. It has managed to get above it a few times, but overall it's a somewhat of a tight range. It's also more of a time consolidation. Markets can correct either through price or through time. And there were many people on the way up that were saying silver is up too much. And therefore, they could have been right. So we've had this correction. And one of the reasons why a lot of times is not a good idea to sell when you think it's up too much is because of one of two reasons. The first reason is the reason we're seeing here is it manages to correct a decent amount, going from 25 to 23. That's under 10%. That's not that much volatility. And you have enough energy that is being fueled from this correction for another move higher. And thus, if you sold it here, you sold it here, it doesn't look as if that is a positive trade. And another reason why you don't want to sell when you think it's up too much is because it can continue going higher before it consolidates. It managed to top out at 25. It could have been 28 before it started the correction. A lot of times, unless you have the correct information, you don't know. Now, as far as profit taking, a little bit here and there, that of course is a different story. Whatever trading style that you use, if it's working, then by all means keep on doing what is working best for you. Within this chart, we can make a pattern of an inverted head and shoulders pattern. It's a little dysfunctional. I was talking about one a couple days ago. It broke the neckline of 24, and then it had a fast move back down below here. And as far as these head and shoulders patterns are concerned, it gives you a reason for why something has happened if you can explain it well. The explanation is when we were making these lower lows and lower highs. And all of a sudden now we're now switching it up to higher lows and higher highs. We have and when you have that type of pattern, it's telling us, okay, the sellers are not as aggressive as they once were, and or the buyers are bringing the aggression back towards the market. We have been hearing a lot about the manipulation within the JP Morgan, how they're shorting the silver market. I've been pointing out on these videos that during the 1980s and 90s, the selling was more violent than it should have been. So the manipulation is very obvious. Now, how price action is going to move from that can be very difficult to determine on a short-term basis. And right now we're going to go over these moving averages. I'm going to start off with areas for support if we move lower. So I'll go over this one, and this one. This one is a simple 20-day moving average. The average price silver is traded at over the last 20 days. The brown line is rising higher, which is a bullish indicator, and a lot of times that's an area that could be found as a level of support. So that would be one area of support. The area above that or below that would be just simply roughly at around $23.10, which was a level of resistance. It was also a level of support. Previous resistance on a breakout very likely can become that of a level of support. It was again within this instance. This volume weighted average price, which is from the start of the breakout back in August. So since that point, the buyers have been in full control, which is very easy to determine just by looking at the chart or seeing the price. But if we have any further selling, that is an area that could be an area for support. The 22 line itself is not only a psychological number, but it's also a Fibonacci level on many, many different occurrences, which includes this 25 high and the breakout of 17 and 3/4 or 17 and a half. it becomes a significant level. It's the 38.2% retracement from the highs and the lows. And this in here is the 50-day moving average. It'll come in much later on because right now it is rising at a rapid rate and is also well above it. As far as these other lines, this is the trend line I was talking about before. We got above it. We stayed above it for a decent amount of time before falling back below it. Therefore, at some point coming back to this level, I would expect some level of resistance to occur within this line. You also have this purple line. That's the volume weighted average price since the since its highs, if you will. The all-time highs, or the nominal highs of silver of 24.95, the highs of the last 30 years, if you will. It came up to 24.95 and it gapped at 9.30 at this level here. So since that point, it was declining as the markets were lower. It found resistance in here, a higher low, which was very important, which made it easier to get above that level. So now what's happening is the average participant who has gotten involved within the silver market since this significant point here is in a winning position right now. The green colored line, this is the 5-day moving average. And it was rising for quite some time. It was support on many, many different occasions, and it started to turn south. And when you have a declining 5-day moving average, all rallies are guilty until proven innocent, as is on a rising 5-day moving average, all sell-offs were guilty until proven innocent. And therefore, you start to have this rally in here. Okay, well, this rally is guilty until proven innocent. You find resistance, you hug this line and come back lower, and boom, you get above it. Now it's time to try to prove it innocent. You come back down to this level. This is where you need to find support. It successfully found support. Now the 5-day moving average is rising. Now all sell-offs are guilty until proven innocent within the market. Okay, so the next one is this one here, the purple color or the orange colored line. It is the 10-day moving average, which you can see starting to flatten out here. Has been resistance on a couple occasions. It's really starting to steep lower, and I wouldn't put too much into this unless it breaks below it. As long as it's above a newly declining 10-day moving average, that's still bullish, and the usual pattern is that the 10-day will start to slowly decline, or no, sorry, slowly flatten out, and then start to slowly rise. Of course, if it has a big move higher, then it would rise along with it. Another thing to look at is the trend line that was used as support during the way up, which would be this trend line. And what we can see here is that it was used as resistance just recently in here. Resistance, resistance. It's another area that could be found as resistance on the way up towards the upside. If you're in any long position right now, remember to raise your stops. If you're playing on a longer term time frame, I was saying during this big move, we need to establish some sort of support. Well, we've established it. We've established 23. Therefore, what you do at this point is, okay, now that I know this is support, I want to put some sort of stop below this line, maybe at 22 at 80. Like I say, if you're making the trades, make your ideas your own. Do what works best for you. If it's working, keep doing it. If it's not, then it's in your best interest, in my opinion, to find new strategies along the way. We're also developing this trend line here. One might want to put a stop below this level. And of course, if you're playing really short term, then all the best to you. But I'm not here to talk too much on the ultra short term time frame. All right, that covers everything that I really wanted to go over within this particular video. How long this range will last for, I'm not too sure whether this is it for the current correction. Once again, I would just wait and see what the message of the market says, because with the rising 5-day moving average right now, all the moving averages rising except for the 10, there's a lot of bullish sentiment. If we to retrace lower, we have this low here at 23.50. You'd want to make a higher low, roughly around 23.75 up to 23.80, and that would also be part of the bullish sentiment. Thank you for watching, and have yourself a magnificent day. Bye-bye.